Hello guys, it's Desmond here again. Welcome to the other part of this video. Sorry, this was cut short. However, I'm just gonna continue from where I stopped the last one. So the last one I spoke about using Fibonacci. So this was me trying to so when you get your trading view, this is exactly how your Fibonacci is gonna come out, like if not worse, guys. Trust me, it looks horrible. So what you want to do is get rid of, because I mean you don't need all these. Okay, for me I only use the 61.8, the 50, the 100, and the 0, and extension minus 0.27 extension, right? So that is those are the only ones I use. So let me just edit this real quick. First of all, let me just take you guys back. If you're looking for how to bring out your Fibonacci, simply come to this point right here. If this is not already put this way, okay, you can click on that. It brings out everything. So you bring your Fibonacci and you can imagine the mess. All right. Sorry. See, you texted me. Um. Yeah, I got a text, guys. Sorry. Yeah. So now to edit this, you just simply left. Why do I keep saying left click, man? Simply right click on your mouse and then come to settings. All right. So when you come to, oops, sorry, let me just take that again. Click on the Fibonacci, then come to settings. Yeah, so you see all the weird colors you have here. So you want to untick all these boxes that contain the not the values and the crazy colors here. So first things first, you want to point out the the Fibonacci points that you actually work with, which are the which I would recommend: the 61.8, the 50, the minus 0.27 retracement point. Okay, so extension rather. So let me just do that for you real quick. So you can see here, this is the 4.61. I don't need this. Okay, I don't need it. I don't need this 4.272 as well. I don't need that, so I'll just go ahead and tick the box. This 3.414, I don't need it. 3, I don't need it. This, I don't need it. I don't need this. So you can just go ahead and untick all of this, all of these boxes that you feel are unnecessary. I need this, I need this, I need this, I don't need this. Okay, I don't need this one. All right, let me just put this one here. And this is the 70. No, I don't need this one. 61.8. Nope. 1.61. No, I don't need this one. I don't need this one. I don't need this. Don't need this. I don't. Oof, guys, it's a whole mess. Trust me. Just untick all this shit. All right. So we are left with the negative 0.27, the 0.5, the 0.61.8, and 1. Okay. So now that you have actually done that, this is exactly how your Fibonacci is going to look. Very, very simple. As you can see, we have the extension point right here. Let me show you guys. This is the extension. This is the O point. This is the 50. This is the 61.8, and this is the 100. All right. So now let me just, now how do we get rid of these colors? First thing we did was to take out the unnecessary values or unnecessary turning point. Now the second thing is how to edit this color scheme. So let's just come to settings once more. Now you want to either reduce your opacity, because this is making the whole thing look incredibly colorful. Can you see? So just the opacity, guys. Just, you don't need to edit any other thing. Just come to where you have opacity and just get rid of that, and boom, you have a clean Fibonacci that looks like my kind of Fibonacci. All right. See, it looks exactly like mine. This is the extension. This is the what do you call it? The 161.850 minus 2.7 minus 0.7. So also let me just show you guys how I got these colors. It's just very, very basic. You can change the colors. Okay, you can still change it to whichever one you want. Actually, let me just change my 0.27 to something different. I'll probably just go with yellow or something. Let me see that. Okay, I think I'll just go with either that or this brighter yellow right there. See, so you can always re-edit this, customize this to fit your personality as a trader. You can change this 50 to what, a red. You see, it turns red right there. You can change it to black. It turns to black right there. You can change it to green. It turns green. However, I like it green. Okay, so this is yellow, which is the extension point. So you can do whatever you want to do on Fibonacci. It's very, very easy. Then how do you actually use this Fibonacci? Let me just show you guys real quick. Okay, bonus. You want to catch it. You want to use it in a trend. Okay, Fibonacci works better in a trending market. That is a market that is either making new higher highs and higher lows, or lower lows and lower highs. All right, so it just depends on you. It just depends on you. But for me, I would say you use this Fibonacci in a trending market, because you want to catch the swing highs and the swing lows. Okay, you want to know where the market is going to reverse from potentially. Okay, so this was a swing high. Okay, so this is, the market doesn't just drop like water. It just drops, rallies a bit, drops, rallies, drops. Okay, so it drops, it goes sideways, it drops, it goes sideways, it drops, it goes sideways. So you want to catch the pullback. We call it pullback. Okay, the overall flow of the river is to the downside, is south. Okay, however, it just doesn't move south like that. It comes with pullbacks. It fell from here, came here, pullback, fell again. So yeah, that is literally what you're looking to catch. So for you to know the exact turning point, where is potentially going to come into, to grab some more momentum or some more strength before falling back down, you just bring out your Fibonacci. This is the most recent swing high to the most recent swing low. Now, why is it swing high to swing low? Is because we are in a downtrend. Okay, while you are in a downtrend, you want to go from, keep getting text, who's texting me, while you're in a downtrend, you want to catch from swing high to swing low. Okay, all right, that is what's this, sorry guys. So you want to catch from swing high to swing low, then you see it tapped right into the 50, or rather the 61.8 or 0.618 region. Okay, and then subsequently fell from there. Okay, so that is how you use Fibonacci. Let me look for another example for you guys. Let me just look for another example real quick. Let me just look for another example. Let's see. Would this work? Would this work? Would this one work? Would this work? Let me see. Yeah, it does. Okay, so this was the recent swing low. So for this slight uptrend here, this was a slight a pullback, rather, a trend, slight uptrend right there. Okay, market made. Okay, this was a low, higher low. That, okay. So yeah, that is a slight uptrend. Okay, market moved up, pulled back, moved up, pull back. So you want to catch, you want to know exactly where the market is most likely going to pull back into after this, one 0 or 100% retracement point right there. So this is it. This is it. Okay, so we catch from the swing low to the swing high in an uptrend, then in a downtrend from the swing high to the swing low. Okay, so this is a most recent swing low to the swing high. Then upon reversal, the market tapped into, it just came dancing around this region, this whole 61.8 region. Then it reversed back to the upside. Okay, so that is exactly how you can plot your Fibonacci levels. Easy peasy. All right. So the next tool I want to show you guys how to use is the position size tool or indicator, whatever you want to call it. All right. So let's say, for instance, we have a key level here. Okay, and then this was a Fibonacci swing high. To swing high to swing low. So hold on, guys. Hold on. Let me just take that back. Yeah, so we have a key level right there, and this was a Fibonacci from swing high to swing low right here. Then the market is pulling back into the zone. So you want to take a sell, because you want to go with the direction. You want to go with the overall direction of the market. So how do you place your buy or sell positions? This is it. Okay, you come to this particular toolbar here, which is right about here. This is 1 2 3 4 5. This is 1 2 3 4 5 6 7 8 9. So this is the number 7 on that. So you want to bring, so once you click on this, okay, it's going to bring out a variety of options there for you guys. If it's a long position tool you want, if it's a short position, the forecast, the date range, price range, date and price range, bars, pattern, ghost feed, projection, whatsoever you want. So in this case, since you're looking to go short, you bring out your short position and then you just put it there. Okay. Now you want to catch, now for those of you guys that use Fibonacci, you know that you want to close 50% of your position at the 100% retracement point, which is here. Okay. So now this is, you want to put your stop losses above the key level and above the Fibonacci point, because price is most likely gonna dance around that level, and then you want to put your take profit. This whole zone, this whole green zone here is where you are in profit, and whenever you are in this pink or reddish zone, it shows that you're in a loss. Okay, so this whole green zone, and the end of that green zone is your TP, your take profit point, your stops. So this is it. Okay, that is how you count. And then also there is something called risk to reward. This also helps you to know the risk to reward. Let's say, for instance, now you want to catch about this is 181 pips and you're risking 55 pips. This is the amount of pips you're risking to get 181.4. So what is that? What is the risk to reward ratio? You get to find out here. This is 3. Okay, that means how many of this 55.1 can I find in 181.4? That's 3. You risk 1 to get 3. That's 3 times of this can be found in this. All right, so that's very, very, very easy. It helps you to know your risk reward. You can, if you see, the more you extend this, the lower your risk reward, your risk reward, because you're beginning to risk more to get less. So the more you keep extending, keep going higher, it reduces. But if you bring it lower, it increases. Okay, you can see. Also, if you bring this one higher, it decreases, because you start to risk more to gain less. Okay, so you want to always risk less to get more. So that is exactly how you use your position to calculator, position size calculator. Sorry, your position indicator rather. So yeah, that is that about key levels and Fibonacci and everything. So let me just get rid of this one real quick for you guys. What else should we talk about? What else should I show you guys? Let's see, head and shoulders pattern. Where is it? Yeah, this head and shoulders pattern, because I use this a lot. However, you don't necessarily have to use the tool though. But let me just show you guys how it works. So this is now what we have here is inverse head and shoulders. If you look clearly, this is the cable for our time frame. You have head, you have the right shoulder, you have the left shoulder. Okay, so this is it: the head, shoulder, shoulder, back to the head. All right, so that is it. It just helps you to bring out the thing for you. It just helps you to pinpoint that clearly. However, you don't need it, because you know for a fact that a reversal pattern is inverse head and shoulders pattern, double top, double bottoms, whatsoever. So now you know for a fact that this is a head, shoulder, shoulder. You don't need that too, but I'm just showing you that you can as well use it if you want. Now, for you to count how many bars and how many pips is gonna take you, you can. This is a measure. It's called a measure. You want to count how many bars or how many pips it is from, probably from this point to this point. Okay, you can clearly see it is 255 pips right there, and it's going to take about 1 day and 12 hours to get all of this. So that is exactly how it's going to help you. Then let me show you a trick real quick, guys, before I call this off. So this is inverse head and shoulders. Yeah, I just want to show you a trick real quick, real quick for free. Then this is this. All right. So the distance from this. Let me use the price range tool. This is the price range tool. I just want to show you how to use it real quick. Now, the distance between every whenever the market is in a range and it breaks out, it is most likely going to break out to the equivalent of the amount of pips accumulated in the range. I say that again. Whenever the market is in a range and then it breaks out, it's going to break out to the equivalent of the amount of pips accumulated inside the range. So let's say, for instance, here to here, you use the price range tool. This is what it is used for. So in here, you have about 133 pips. That was what was accumulated from the neckline to the head of this, shoulder, inverse head and shoulders pattern. Then once you bring that out, you will notice that the market broke, some, just around there, around that 133 pips. So this kind of helps you to know how long to hold a breakout trade, or what have you. So it's just one of those tricks that you can add to your portfolio or to your arsenal of weapons. It's just one of those weapons you can use. So whichever thing works for you, that's fine. So that is exactly how I like to use my trading view, and that's exactly how you can get your trading view to look like mine. Okay, however, let me just show you guys something else real quick before I leave. How did I come about this bar? This bar here contains my favorite tool. Okay, that means the tools that I have started, and then I want to have easy access to them, so that when I go on a bigger screen, I don't have to constantly come here to look for them. It's readily available. So how do you get this thing? So let me just, you see, it's favorite drawing tools toolbar. Okay, so now let me just get it out again real quick. Let me just undo everything I've added there. You can see once I undo everything, it just leaves, everything just leaves. And then what else? The ellipse out, the pointer. What is this? Sorry guys, that's the ellipse. Now the pointer, I can get rid of the pointer, that's the arrow. Then what else? This is my short position, long position, and my Fibonacci. So I'll get rid of, sorry, as a text. Get rid of the Fibonacci. I'll get rid of the short position. Get rid of the long position. So yeah, I'm left with nothing, no favorite tool whatsoever. However, let me just get rid of every joint here. So however, how can I have a bunch of favorite tool readily available for me? First things first, I want to, go to the tool I want. Is it the arrow tool? I want to favorite that. It comes. So once it's tight, it just comes. So you don't have to come here to look for them again. Then next thing is trend line. Bring it there. Okay. Next thing is Fibonacci retracement. I start, it appears there. All right. Next thing is my ellipse. Where is it? Ellipse. That is it there. All right. Next thing is my what text. You want to type something on the screen. Okay. You can add that. Is there. Next thing, my price range. To I want to add it there. Cool. Long position, short position is there. Okay. So what else? What else? What else? What else? What else did I have there? My rectangle toolbar. My rectangle toolbar, that is it there. Okay, so literally that is how you can get to favorite your tool, just by starring all of these tools, and then they will appear on the screen, so you don't have to necessarily come here looking for any one of those. And then if you want to get rid of everything, just remove drawings, or rather right click, or just remove drawings right here, whichever one works for you. All right, so that is that about that, guys, and thank you so much for sticking around to the end of this video. Feel free to like, comment, and see. Let me know what else you would love to see on my next YouTube video. However, there is a link. There is a link in the description that brings you directly to my Telegram channel for free signals, for free mentorship. What have you? What do you want? Is it the crypto? Is it the forex? Is it, what financial market are you into? We offer all of that totally for free. So once again, guys, my name is Desmond Mo, and see you guys on the next video. Bye bye for now.